All right, what's up, you degenerates? Reddit has been public for about the past 2 weeks or so, and in that time, they haven't received nearly enough bullying and hate, so we're here to come and fill that void, or maybe we're here to say that this is the hottest tech investment since NVIDIA, since supermicro computers, or probably more accurately, since Pinterest back in 2019, as that is really the last relevant social media IPO, so they're kind of passing the torch to Reddit in that regard. We're going to be breaking things down for you guys in just a quick second. We here at WSO, we might even be uniquely qualified to comment on Reddit, given that we're both very forums-driven businesses. Now, I myself am barely qualified to tie my own shoes, but still, we're going to do our very best, and in doing so, we're bringing together all of the apes from every corner of degeneracy within financial markets. So we, of course, have our favorite apes here at Wall Street Oasis, and we're also bringing in all the lovely apes from r/Wall Street Bets to join us along for the ride. Like I said, guys, welcome to the 5-minute peel here. My name is David. We're going to go ahead and break everything down for you related to Reddit. You guys know how this goes already. I'm going to pull up my screen here and share what I thought to be some of the most important information to come from the company's S1 and some other sources with questionable reliability. But either way, let's go ahead and get started here, get those timers going now. So most important thing to notice is that Reddit today has about a $7.63 billion market cap, down about 24% from its $10 billion market cap assigned in 2021 in private markets. Revenue has been going strongly in that time. Margins have been expanding as well. Look at this, 86% margin. That's ridiculous. Along with this, nearly 55% R&D to revenue ratio. We're going to be talking about that in just a quick second. But the big problem here is that the company has never once even dreamed of coming close to profitability. So obviously, it's a huge problem given that they've been selling ads since 2006. So it's been 18 years, no profits at all. Now, they do have a super strong balance sheet with a 3x cash ratio and absolutely no debt. And that's why we see no interest expense either. But of course, at the same time, we are seeing a disgusting free cash flow margin. So the company's ability to monetize in terms of earnings and then give that back to shareholders via free cash flow has not worked one bit. We'll see if that can change going forward. Now, here's a view of the stock price so far. Obviously down big here today, but down about 2%, down 30% from this peak or so, but it's been a rocky start. That's pretty much the IPO frenzy going on. So a couple of quick things to break down. Now, Reddit isn't going to report its earnings until mid to late June or so that's where we'll actually be able to gauge the market's view of this thing. They'll be looking at revenue growth as well as margins, of course, especially the fact that the company has higher margins than every other social media stock. But like we said, they suck at monetization, but they're really good at engagement. So we'll see if they'll be able to work this out here. So let's break down some of the stats that Reddit gave us in their S1. Now, of course, they did not disclose their MAUs like every other social media company does. This is kind of the standard metric for users on social media sites. It's estimated that Reddit has about 1.21 billion, but what they did tell us is that they have 73 million unique daily visitors and about 267 million unique weekly visitors. So that's a good amount of traffic. Now, the company is, of course, the third most trafficked website in the United States as well. But the thing is, a lot of this comes from strong SEO capabilities on Google searches. People are going onto Reddit, but they're not signed in. That means that the company doesn't really know who these people are whatsoever. It's very difficult to get ads in front of these people, like without harvesting and absolutely robbing you of your data like Google and Facebook do. Now, you can say things like, oh, I'm in the catfishing forum, so let me go ahead and sell like catfish bait or some shit like that. But you don't get down to that personal level. And that's why we see an ARPU of $3.42. It's a little bit better than Snapchat's $3.30, but being a little bit better than Snapchat in anything isn't very good. It's nearly half of Pinterest and absolutely disgusting compared to Meta. So that's kind of the big thing that we're talking about in terms of engagement and monetization and why they suck so bad, because despite their popularity, they don't know their users. All right. Going forward, the company has basically said that they're going to be relying on data licensing. $203 million contract was announced. They'll recognize $66 million in 2024. Now, it's from a large unnamed AI company. Seems a little weird that they're doing this because the X model to me just seems more effective off the top. Why isn't this company developing their own artificial intelligence platform? That would be massively valuable if Reddit was the only place that you could go to get Reddit content. That's exactly what X is doing, and it seems to be working out pretty well for them. We don't know why Reddit didn't do so, but that's definitely a big knock against them. Longer term, they want to do a developer platform, basically just building tools so you can build shit on the app itself. A contributor program, basically just like the YouTube model where they pay you for driving traffic to Reddit. A commerce ecosystem, think TikTok Shop. And the collectible avatars, which is basically just NFTs, which absolutely nobody is going to do because I don't know any better form of birth control than owning NFTs. But what we can see here is the big problem with Reddit right now is its earnings. Like we said, this company has never generated a profit, but it still has a ridiculous valuation. So this is forward price to earnings. like I said, this comes with the assumption that they're going to do something that they've never done before, and that is actually make money. So that's a bold assumption in itself, but this thing is wildly overvalued on an earnings basis. But if we break it down on a user basis, this thing looks pretty undervalued compared to a lot of the other players in the industry. Meta with a $400 per user market cap, Snapchat at $23.75, and Pinterest at $47.09. Reddit is only $6.67. That's about as expensive as your average Starbucks coffee. So that's what the market is valuing a Reddit user at right now. And like we said, the big reason for that is because a lot of Reddit's traffic is from the SEO, and it's from people that aren't logged in. So you can't do targeted ads beyond just the forums themselves, really. Now, this really started to blow up in 2023-ish. Google and Reddit both changed their algorithm, so the thing absolutely skyrocketed. But this is both a good thing and a bad thing, because it's getting more eyeballs on the site, which is going to be good for the artificial intelligence database, but it's not necessarily good for the price tag of the ads that they can sell. So effectively, what's going on here, one of the big reasons for that is because that Reddit has a super high R&D to revenue ratio. It's at 54.5%. It's absolutely dominating every other social media company. We can see that right here. Reddit's in that blue line. This is a big reason why the company hasn't been profitable either. So we'll be talking about that in just a quick second as well. We love a high R&D to revenue ratio because it shows that they're investing in the product and in themselves pretty heavily. But like we said, this is a big reason why the company isn't profitable. So applying the company's current R&D to revenue expenses, we can see that why they haven't been able to drive losses really, or at least one reason contributing to that. If we were to apply Meta's R&D to revenue ratio, Reddit is not only profitable, but profitable like with $130 million. That is a huge margin as well. Now in 2022, it's not great, but huge margin, 127 on 804. What's that, like 15-20% or so? Now, that is absolutely phenomenal. Obviously, they don't want to do that. That would lead to a weakening platform, slower growth, and a whole lot of other risks, but they do have the ability to turn on profits by flipping that switch, especially given that they have a ridiculous gross margin at 86.2%. Once again, Reddit is here in the blue. They are dominating every other social media stock out there. Let me go ahead and zoom out a little bit so that we can see these names. See, even better than Meta, way better than Snap, and better than Pinterest as well. All right, scrolling down, we can see the company's growth in users has been healthy, and in addition, their growth in average revenue per user has been healthy too. So not only are they getting more people on the platform, they're sucking more dollars out of those people as well. Obviously, a good sign for investors. Now, a lot of that drives kind of or warrants a high valuation. Having a high R&D to revenue expense, high gross margin to very high growth, that warrants a premium valuation. So let's keep that in the back of our mind. But a huge red flag in this report was the company's management compensation section. Now, I'm showing it to you exactly how they presented it in the report because I want you guys to see that they don't really want us to see what's going on here, and that's why they make it pretty hard to read. So we have CEO Steve Huffman over here. He took home about $194 million in 2023. And then even worse, we have the chief operating officer over here taking home about $125 million or so in 2023 as well. Both of them are wildly overpaid compared to other social media CEOs. Now, obviously, a lot of this has to do with equity compensation versus dollar compensation, but this is what they all received in total in 2023. See, 193. Reddit's COO would be somewhere about right here, making more money than even the CEO of Pinterest and fucking Meta, Mark Zuckerberg. I almost said Facebook there. And then Mr. Evan Spiegel right here, who owns 95% of Snapchat. So they don't necessarily have the equity ownership risk that a company like Snapchat does, but they are absolutely raking it in. Meanwhile, their company is doing the exact opposite, losing money every single year. Shout out to Quartz for that data. All right, summary of our thoughts so far. Reddit is experiencing a ridiculous IPO frenzy. So, that's never really something that we want to touch. We kind of want to let the price discovery process happen on its own. Profitability issues are going to be huge, but they could be fixed by lowering the R&D expense. And that might lead to weakening SEO, lower quality products, slower growth, or worse AI capabilities. Now, the risk of having to pay moderators as well is huge. If you guys don't know, moderators are basically slaves that work for Reddit for absolutely no compensation beyond bragging rights and, control over this little corner of the internet that they have. But mods have been talking about getting paid for the work that they do. And that would completely fuck over Reddit and destroy any hopes of profitability in the short term. So that's kind of what we're looking at right now. Unless AI licensing takes off, that's going to destroy their profitability. But once again, why didn't they launch their own LLM? It seems way better to just own your own data, own that IP, and to monetize that as best as possible, not necessarily to license that out to Google or whoever the fuck else this quote-unquote large unnamed AI company might be. Now, management did grossly overpay themselves, but they do have high gross margins, very high R&D expense ratio, and that's what we love to see. What to watch for going forward is that forums are a very tough business. They're very macroeconomically determined because ad spending is kind of the easiest switch to turn on and off for these companies when they think that they're going into hard times or coming out of hard times. So if it's a bad macro cycle, it's going to be really shitty for the forums business. Just ask us here at WSO. Haircuts to valuation certainly could be incoming on an earnings basis. And really the big question here going forward, almost the only thing that matters, is if the company is able to effectively monetize its AI capabilities. Now, that very much might be the case. I'm not sold on that right now, and that's why the WSO rating is 2 out of 5 bananas. Avoid this thing like the goddamn plague. You do not want this stock in your portfolio unless you love taking those huge risks and just being along for the ride. We love that here at WSO, but, sometimes you got to put food on the table. So for the average person, avoid this thing like the plague. If you're looking to get into social media stocks, Reddit is not the move right now. Big reason is wait for this post-IPO frenzy to kind of chill the fuck out a little bit, and that would just entail waiting until their first earnings report. Plus, we want to see how they're doing on the AI side. So if they come out and they've been raking it in on licensing their data, then our opinion is going to change. When the facts change, I change my opinion, believe it or not. But for now, 2 out of 5 bananas. Avoid this thing like the plague, like I said. Otherwise, happy investing, happy trading. Thanks for joining us once again, guys. Let us know what other companies you want to see, and we will get right to it. But otherwise, have a phenomenal rest of your week. Bye now.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.